Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you.
Everyone, welcome back to the channel. Today we're going to take a quick look at what's been happening in the market, and what we can expect in the upcoming days. So, to start, stocks had a bit of a down day yesterday. The main cause was an increase in rates, with the 10-year Treasury yield going back up above 3.6%. This caused a boost in the US dollar, and some commodity prices, like oil, went up too. Overall, defensive stocks like consumer staples and utilities did the best, while riskier investments like small caps and tech lagged. Moving on to what's next, we have a lot of attention on the Fed this week. Last week's quarter-point rate hike was met with some optimism, as Chairman Powell indicated that the rate hiking cycle is winding down. However, we think there's still one or two more hikes to come, followed by a pause as the Fed evaluates the trend in inflation. Fed officials will be speaking in the coming days and weeks, and we expect them to set reasonable expectations for the financial markets. Tomorrow we will be looking at any indication that 50 basis point rate hike might be on the table. And last but not least, earnings season has been a mixed bag so far. Roughly half of S&P 500 companies have reported, and we're seeing decent revenue growth, but pressure on profits from rising labor and input costs. Industries like industrial and energy had the best earnings, while tech, financial services, communications, and consumer discretionary had the weakest. The overall consensus for S&P 500 profit growth for the full year is 2 to 3% according to Bloomberg estimates. Let's talk about C3.ai Inc. and potential bubble that might be forming sparked by ChatGPT. The world of AI is creating a buzz on Wall Street with the success of ChatGPT chatbot by OpenAI. This chatbot has attracted multi-billion-dollar investment from Microsoft and is estimated to have reached 100 million monthly active users in just 2 months after launch. As a result, shares of C3.ai, BigBear.ai and SoundHound AI are rallying on the back of ChatGPT's success. These three small-cap companies have more than doubled in value this year, with SoundHound even surging 40%. Investors are scouring for companies that develop AI-related technologies, and as a result, any company that mentions AI is seeing a rally. The surge in prices is due to long buying, as investors move into AI stocks, rather than any significant short covering. This trend is expected to continue as ChatGPT continues to grow and attract more investment. In conclusion, the success of ChatGPT has sparked a new craze in the stock market, and AI-related companies are the ones to watch. This reminds me of EV rally we had couple of years ago. Stocks like NIO, XPEV and few others had their time. Is it time for artificial intelligence stocks to rally? Drop your thoughts in the comments. I've held AI since their IPO. Yes, I bought at very top, but I have been averaging down. In total I hold over 5,000 shares, majority of which I acquired near or at the bottom. I am considering opening covered put and buying more shares with the collected premium, and most likely I will do some covered calls few months out. Next, let's talk about Airbnb. Airbnb stock has been receiving positive attention from investors lately. In the month of January, shares jumped over 30% due to rising confidence about economic growth trends and anticipation of good news in its next earnings report. In this segment, we will analyze whether Airbnb stock is a buy for investors. Airbnb has managed to maintain its growth, despite the current economic situation. In its Q3 earnings, the company recorded a 25% increase in volume and a 36% increase in revenue. These gains came even as many workers returned to the office, and suggest that Airbnb isn't as exposed to a downturn as its peers in the travel industry. The company is also generating good profits and cash flow. Airbnb's Q3 was its highest earning period to date, with net income jumping 61% to $1.2 billion. The company is also generating ample cash, with free cash flow landing just under $1 billion last quarter. This makes the company less susceptible to rising interest rates and allows it to fund its own investments and growth initiatives. Airbnb is valued at over 9 times its annual sales, which is not cheap. However, this valuation is down significantly since early 2022, when investors were paying over 18 times revenue for Airbnb shares. Although it's not clear how Airbnb's business will be impacted by a potential downturn in vacation travel demand, investors have some encouraging signs, including the rising volume of long-term stays on the platform. In conclusion, the upcoming Q4 earnings report in mid-February is expected to show good results in areas like booking volumes and cash flow. These are important metrics to watch when considering whether to buy this stock during the current market turbulence. I think Uber's earnings will be the driver for investors to interpret how Airbnb is going into earnings. Reduction of workforce might also be on the table for both, since this seemed to be the trend with most of the companies. Share buyback is also on the table, but we will see when Uber reports. As always, make sure to do your own research and invest wisely. That's all for today. Stay tuned for more updates from the finance world. Don't forget to subscribe, like, and comment. I'll see you on the next one.